We're considering forex analysis today. Analysis are basically the way we predict the price movements in the markets. So, and we have three major forms of analysis. We have fundamental analysis, we have technical analysis, then we have sentimental analysis. So, in today's class, we'll be considering the different types of analysis, and also the second point to be treating is which type of analysis is the best. So, without wasting much of my time, I'll just go ahead and start explaining. Um, in Forex, there are three ways we predict how the prices of each currency will react or will move. And we have three major ways, which are fundamental, technical, and sentimental. The success in forex market is highly dependent on the proper analysis and predicting the future price, either using the economic news release or past price movements. Now, let's take a closer look at the three types of forex analysis, which are fundamental analysis, technical analysis, and sentimental analysis. Fundamental analysis is process of forecasting price movements in markets using important political and economic news release which directly affects the behavior of the currency pairs. This is done based on macro and microeconomic indicators as well as news background. Fundamental analysis is tracked using economic calendar. Each country's economy has its economic calendar. So it's in this calendar that we're able to see and make our analysis based on the data we are receiving. Fundamental analysis is basically the things that happen in a particular country that tends to affect the currency of that country. For example, in, in the United States, there are important news release that affects the United States dollar. News release like unemployment rates, um, GDP, that's gross domestic product, and FOMC and Fed news release. Those are news that comes out and affects this uh, currency pairs. Going further, okay, this is an example of um, a calendar. That's an example of a calendar you can use to track this news release. Let me go back and explain something about it. In this calendar, you can notice that there are three different colors that it comes with. So each of these news here has its impact on the currency it is being released on. You can see euro, you can see CHF, you can see GDP, you can see card, you can see USD. The ones in red signifies that the news is very high and its impact on the currency pair is going to be high. The ones in yellow means medium impact, as the ones in orange mean low impact, little or no impact. So the ones we are considering and the ones that has to do with our attention is the ones that are in red because those are the ones that are having high impact on the currency pairs. So those are the news we watch out for. And the places we go to check for this particular news, we have Forex Factory, we have my FS book, and investing.com, and several other platforms that provide us these data. Personally, I use Forex Factory because they are um, they are more updated than every other ones I know. So Forex Factory is a is an economic calendar that you can is a firm that has a particular spot where you can check the economic calendar, the foreign exchange market. Whenever news is coming up, you see it, the time and date, you see it on this calendar. So what you do is you based on this news that is coming up and data that is given, you can be able to predict, okay, if the employment rate or unemployment rate in the United States is high or low now, it tends to affect the market at that particular time of the news being released. So fundamental analysts, they are the ones that forecast the behavior of this um, currency when these news are being released. If the and you can see from this point we have the forecast and actual previous, and you also see the graph. This is the forecast is what is predicted to happen. Then the previous is what happened initially when that news happened was released last time. Then the forecast is what is expected to happen. Then when the news is released, that's when you will see this actual. That's when you see this actual. So fundamental analysis basically deals with news released in a particular country. For example, now when Tinubu became president, I think one of the things he did that affected our currency, he removed subsidy, and immediately he said he has removed subsidy. You can see that prices of things begins to spike up, and uh, there tends to be this inflation in the country due to that particular news. So in every other countries, there are news that affect the country's economy. So those news tends to affect this currency pairs that we trade. So by so doing, having the data at hand, you can predict the price movement of the market using this data you have at hand. And one of the ways you can get these data are these economic calendars I mentioned earlier, which is Forex Factory by FS Group, investing.com, and several others you can play your hands on. But I personally stick with forexfactory.com because it is user friendly and more efficient in giving you live information. So the second type of analysis we have is technical analysis. Technical analysis also a method of forecasting the currency pair behavior based on its past movement. Technical analysts believe that analyzing the patterns in price history is enough to determine the high probability trades setup. For example, now, if something has happened before and you are seeing the sign that it will happen again, you predict that, okay, the last time this thing happened, the last time the market moved like this was what later happened. In that essence, you'll be able to predict um, the market's movement using candlesticks, indicators, and whatsoever. We'll explain those things later on. If the price reflects all the information in the market that is in the market, then price action is all one needs to really make good trade. Well, because history they say tends to repeat itself. It is not. Let me say something. All the type of analysis have its own traders. There are traders that work with fundamental analysis. There are traders that work with technical analysis, and they are all making money. They are all making money. So you just have to master the one you you work with. So personally, I use technical analysis and fundamentals. Yes, you need a bit of fundamentals to actually gain an edge in the trading platform. So technical analysis is done using a chart. I will show you. I will give you an example of charts. Let me share and show you an example of the charts. This is a chart. This is how a chart look like. These are these are candlesticks. So these are the things that tell us the movement of prices of currencies. So each of these things is a way of communicating to a technical trader that okay, these things happening now are just like languages that you can read and understand. And there are the type of candlesticks that appear actually tells us what has happened in the past or what is currently happening in the market at that particular time. So these are basically what technical traders read and understand the market better. And they make use of tools like indicators and chart patterns. Chart patterns in the sense that these candlesticks has formation. You can see the way they use. So there are ways that it forms like that. They will say, okay, the every time candlesticks form this way, market tends to go up or go down. So they have mastered and understand this arrangement so well that when it forms again, you'll be able to predict that this is what the market will do. But mind you, perfection is one thing that is not guaranteed. It's not a holy grail. It's only God that is perfect. So, but based on the previous data you have at hand of this price movement, you'll be able to predict the movement of the future price using the previous data you have and the behavior of the candlesticks, because all these things, as I said, are languages. They are communicating what has happened in the past, and likely if if formations like this happen in the future again, the market will tend to repeat what it has done before. So that's one thing about technical analysis. So back to our point. The next type of analysis we have is sentimental. Sentimental analysis is basically how somebody feel the market will go. It's like your thoughts now. You're thinking that okay, I just feel like this thing is going to move up, or I feel this thing is going to move down. And yes, sometimes 30% of 30% of the time they are right, around 70% of the time they are wrong. And there are still people that does this and make money. They have studied themselves well and studied the market well and have mastered how that this will work for them. So we have three basic types of analysis. We have fundamental analysis, we have technical analysis, and we have sentimental analysis. I recommend technical analysis because it tends to do with what the market is doing at that particular time. It tends to do with the candlesticks and candlestick chart patterns and formations. The, the candlesticks are languages that communicate to traders what is currently happening in the market and what the prices are doing. So technical analysis tends to stand out most, but every other analysis, I'm not saying that they don't work. They work, but the ones that we tends to work with the most technical analysis and a touch of fundamental analysis. Yes, because you have to check if there are news coming up so that you won't be affected when you are taking any trade and all of that. So going further, I'm going to go back to the lecture note I shared to the group earlier. The lecture note I shared to the group earlier. Um, it's quite difficult for newbies to understand and capture everything in a while, but I believe if you are committed to learning, you are going to grasp whatsoever thing I'm going to be saying over time. That after this class, I'm going to drop aside other things that I've dropped, now I'm going to drop some other materials that can be of help to you. So, um, okay, are you still hearing me? So, going further from where I stop, I want to furthermore explain the the and types of analysis. So, I'm going to be making use of this lecture notes. Yes. Okay, fundamental analysis. As we said, there are economic news that are released in a country that affects the country's currency. Some common fundamental news release that can influence market price are gross domestic products or profits, whatever you want to GDP of a particular country. That's the output of a particular country, the production capacity of a particular country directly impacts on the currency value. And inflation rate or consumer price index, the rate at which people consume and um, in a particular country also directly affects the country's currency. Then the interest rates, as we were defining, and we were talking about the central banks yesterday. We said central banks are the one that determine the interest rate of a particular currency of a nation. So the interest rate of a particular currency country has impact directly on the currency's value. So and these things are released as news whenever there is new interest rate released. So NFP is non-farm payroll. NFP is a very high impact news that has to do with the employment, total employment in the United States minus the farmers. So, and it is a very high impact news. We watch out whenever it is negative, it means the affected country, the country's currency tends to lose value. So, okay, as I was explaining the economic calendar earlier, I said the red folder, the reds. If you see anything red on the economic calendar, it means that news is the high impact news. Whereas the yellow is low impact. That means it won't really affect the the currency. Then the medium, that means it has little impact on that particular currency. And I said websites that you can get this calendar investing.com, Forex Factory, and my FX. So those are the three common companies you can use for Forex Factory. Then talk of technical analysis. Technical analysis basically is reading the price movements in the on charts of which I showed earlier. So and price moves in three ways. It either moves up or is going down or is flat, is consolidating, it's not going up now, it's just consolidating. It's moving in a range. So if market is moving up in forex, we call it uptrend, where the market tends to create higher high, higher low, higher high, higher low, higher high. For this is an uptrend. In an uptrend, you see higher low, higher high, higher low, higher high, higher low, higher high. But in an uptrend, you see lower high, lower low, lower high, lower low, and so forth. So that's the way the market moves. So in a ranging market, the market is not going up or down, it's just consolidating. That means it's in a range. So In what's technical analysis it's all about is it's all about reading what this market movement is doing, and candlesticks better communicates the behavior of the market. So with the help of candlesticks now, the study of candlesticks, you'll be able to know okay when to enter a trade or not. You'll be able to predict if the market is going to continue going down, or it will start going up from this point, or it will start coming up from this high. Candlesticks will help you to gain much knowledge on that. So, and these trends can be either for a short period of time or for a long period of time. Markets can continue to go up for a long period of time, or it will just be for a short period of time. Depends on what is driving the prices at that particular time. Um, and what we do is we trade together with this trend. You don't trade against the trend. You trade with the trend. When the price is going up, that means you trade with the trend. You are buying. When it's coming down, you are selling. You don't sell when the market is going up, and you don't buy when the market is coming down. Trend can be spotted using price action, trend line, moving averages. These are indicators that you can use to identify trend. Furthermore, when we talk on analysis, the more we get better understanding. And this is the third way the market moves. The market moves flat. It doesn't go up or down. It's just moving in a zigzag way. Like you can see that the other ones, it was making higher low, higher low. But you can see this one is just in a range. It's in a flat range. That means the market is consolidating. It's not really going up or down. It's just in a particular range. So this particular one, we don't tend to trade it because it's not looking realistic. But you can there are people that still they'll, they'll buy here when it gets here, they sell when it gets here, they take their profits, they buy again, it gets here, they take their profits, sell, it gets here, they take their profits. But it is not actually ideal to trade a consolidating market movement. During consolidation, it is advised to stay out of markets because there is either low volatility or buyers and sellers reluctant to place trade in a specific identifiable direction. There are various strategies matched with indications that or price action that successfully used in trading a choppy market. That's a flat market. Some of these indicators that suit a flat market is Bollinger Bands and oscillators. These are just indicators that you can add on on the chart to be able to trade that flat market movement. Okay, so support and resistance. Support and resistance are areas in which when price tends to get to and reverse or continue to go up. For example, when the market is creating higher highs and higher lows, if you remember I say higher high and higher low. So this low here is a support because when price gets here, it couldn't go down. So it went up again, then this place resisted it, then it came down and supported the price, and it couldn't go down again, and it started going up. So from the diagram you can see that support and resistance level are levels in which when price tends to reverse or continue going up. So basically, and as you go further more, you understand it better. These levels can also be referred to as demand and supply zone. It can also be referred to as demand and supply zone. And these zones are not just they are not just a random area where price turn. There are potential sellers waiting to short at resistance points, and so are potential buyers waiting to go long at key support levels. All these buyers and sellers work together to send price lower and make up the supply in supply and demand equation. more supply than demand, price falls. More demand than supply, price rises. If you know the law of demand and supply, when people tends to demand for a particular product, it tends to go up. The price tends to go up. But when there is so much supply than the demand, the price tends to shrink. The price tends to go down. So it also works in forex because the people that are participating are humans, and when the same law of economics, the same law of demand works in foreign exchange. If there are much buyers in the market, it means the price will be going up. And if there are much sellers, it means the price will be going down. That's it's just basically demand and supply. When there is demand, the price is going up. When there is higher supply, the price is coming down. So um, basically, I wanted us to just talk about the types of analysis, then give an assignment and expect questions for today. We are not really doing, since we are still considering the fundamentals, which I titled today to be intermediate class. We are just going to just know the types of analysis, how we are to predict the price movement in the forex market, in which I said you can use fundamentals, which are news that are released in a particular country, which could be employment rate, unemployment rate, inflation, interest rate, GDP, and whatsoever. Yes, and whatsoever. Then we have technical analysis. Technical analysts, they make use of, let me share my screen again so that you you, you grab. So can you see my screen? Okay. Yeah. So you'll be wondering how the mathematics behind all these things work. If you look at the right arm here, this is the price of, let me use the currency pair instead of Bitcoin. This is GBP USD, that is Great Britain pounds and United States dollar. At this particular end here, you see that these are the prices. Price was once here before it came down to this place. So from this point now, if you would have sold, that means you would have made profit when price came down to this place. And from this place, you can see that its price moves, it moves down, it moves up, move down, move up, move down, move up. That's what I was trying to explain. These are lower lows, lower highs, lower lows, lower highs, lower low, and lower highs. This market is in a downtrend. Market is going down. If you look at everything happening here, you can see that market is going down. So technical analysis is basically looking at the behavior of these candlesticks, how they are forming, and what they are currently doing. By so doing, you can make use of indicators. You can make use of indicators. You can see technicals. You can make use of indicators. All these things are indicators that you can add to the chart to see and predict the movement of price. So technical analysts deal mostly with just the charts. They tend to read what the candlesticks are telling them at that particular point in time. So the thing is, it will take some time for you to understand some basic things about the psychology of candlesticks. But the book I sent earlier on, the book, that's Candlestick Trading Bible, you, that book will tell you, if you get to read, if you read it, it's part of the assignment. That's why I said I don't really want to talk much of on analysis today. I just want to just introduce it. Then see how you go and make your own findings through the material that are provided, so that whatever I don't understand, you come back then I can explain further. So these things are telling us the movement of price in the market. They are telling us what the market has been doing and what is happening. So and it has time frame. We have 4 hours daily. All these things I will explain further on our next class or in a more refined way. So basically, technical analysts with this. They deal with the charts. They watch the charts, look at what is happening through the help of indicators and whatsoever strategy they are adopting to predict the price movement. So that's basically what technical analysis is. Then sentimental analysis, as I said earlier, it's basically they feel, what those traders feel that the market will do. Maybe I will just sit down and I'll now say, based on the things that happen now, I feel the market is going to go up, not really having any profile backed up with data to back up my claims. But fundamentals and technical analysis has its own base. The base of fundamentals is economic news release, which I mentioned earlier. Then technicals is basically relying on the charts, watching the charts, what these candlesticks are saying and what they are doing, the behavior and all of that. So that's basically it. So I would like to say for now, I think it's only you. I every other person are messaging me, but I don't know why they don't used to come up on the live stream. I don't know. It seems I will rechannel my attention to just you, since you are always available to come up and attend the class. So I'll, I'll see how I'll be able to refine my concentration on you. Every other person can do the same if they want to. But I think for now, instead of having much expectation that people are going to turn up without really turning up, I'll just channel the energy. So basically, what I just want to introduce you to is the types of analysis, how we predict the price movement in the market, which I have earlier mentioned to you. So that will be all for today. There is there is a book I dropped, and also a video I recommended that you watch. Once you are done, once you are done reading, you can get back to me. If there's anything you don't understand, then I will explain. But I really want you to read this candlestick trading Bible, because it will help you to understand the types of candlesticks we deal with in the markets, chart patterns as well. As a technical trader, this book is going to help your understanding. Then watch this video. This video comprises of the things which I talked about yesterday, and also a part. It's not detailed, but it's kind of like collective knowledge of what was talked about yesterday and today. So I advise you watch it. It's just 22 minutes. Then this book as well. I, I so much want anybody that is interested in forex to learn about candlesticks trading Bible, to get more knowledge on how candlesticks work and the psychology behind each type of candlesticks, because there are all these candlesticks has its own needs and behavior in the market. So I advise you read and watch out for them. So that will be all for today. If there is any question, report to my DM or drop it on the discussion group. I'll attend to it. So thank you. Good night.